Siddharth Zarabi, there will be, the challenge is resource mobilization. How do you, if you are to bring in some of these suggestions that are being already put forward by our eminent guests, how do you actually raise resources? I've heard talk of a wealth tax, some way of taxing. How do you tax people at the top of the pyramid in a way? When you also want to stimulate private investment, you want to kickstart the economy, surely you can't sort of add to taxations at a time like this.
Given how tax collections have performed so far this year, both on the direct and the indirect side, this has been a very robust year as far as tax revenues are concerned. If you were to add some disinvestment revenues, I would say the government will overshoot expectations there. However, that tells us that one, instead of a further increase, it would make eminent sense from a consumption point of view and from a political economy point of view, Rajdeep, to look at some further relaxations, particularly for the tax-paying middle class. The corporates of the country got a big tax cut in September 2019. The middle class is waiting for it. The non-tax-paying class, which gets a lot of the subsidy bill, will perhaps look at more further subsidies. I just want to give you one quick number. Last year, which was the previous financial year, the actual social subsidy bill was 6,50,000 crore. I am rounding off figures. Current year's budget had projected at 3,70,000 crore. I believe because of the extra spending, it will perhaps close at 5,50,000 crore. What does that tell you? The spending from the previous financial year to the current financial year on social sector subsidies, fertilizer, food and everything will be 1 lakh crore lesser. In summation, I expect this budget to do a balancing act, further reduce the fiscal deficit, and I perhaps don't see any new schemes, perhaps redirection, yes, but no new schemes happening, Rajdeep.
Let's look at specifically the immediate challenges that are faced. This is a budget, as we've been saying, which is going to be brought in at a time when inflation is a concern, not just in India, but across the world. Nilesh Shah, in that sense, do you believe that the finance minister is constrained by the concerns of the challenges being posed increasingly by inflationary pressures and supply chain disruptions?
Supply chain disruptions, undoubtedly. But inflationary pressure in India is still well within RBI's target range. For 6 months in running, US inflation is higher than India. That has rarely happened. And from a resource point of view, what Siddharth mentioned, there is multiple ways of raising resources. Asset monetization is one way. Today, the banking system and government liquidity is more than 10.5 lakh crore. And if we can put some of the government assets like roads, highways into REIT or investment trust and put it into market, I'm sure out of that 10.5 lakh crore liquidity, a lot of money can shift to those instruments. Global investors, despite rising interest rates, will be interested in investing in Indian REITs and InvITs as it offers them long-term interest rate, long-term returns. So asset monetization is one way to raise resources. And as I mentioned, there is 10.5 lakh crore liquidity lying in India's banking and government system. The second thing is divestment. No matter what kind of market is there, in last 20 years, we have never achieved our divestment targets. Maybe it is time to reinvent the wheel. A holding company structure like GIC or Temasek, where professional managers manage government's non-core holding and look for strategic or market divestment, will ensure that at least we start achieving our divestment targets. And if we get better valuation, that will be added bonus. Along with corporate tax collection, personal income tax collection, plus asset monetization, plus divestment, we should be able to raise resources which are necessary for supporting